Good afternoon and welcome to the Annual General Meeting of Albion Enterprise VCT. My name is Maxwell Pack, Chairman of the Board of Directors. May I introduce my board colleagues. Christopher Burrows and Rodri Whitlock have joined me at Albion Capital's London office. Lady Balfour of Burley and Patrick Reeve have joined as panellists. You should be able to see all the board members on the screen. Will Fraser Allen, the Managing Partner of Albion Capital, will be joining us shortly. You will have read in the annual report that Lady Balfour of Burley will retire from the board following the conclusion of this meeting. On behalf of the board, I'd like to thank Lady Balfour for her wise counsel and professionalism, and we will miss her invaluable mix of skills. The board would also like to thank Lord St John of Bletchley, who retired from the board on the 30th of November 2020. Please join me in wishing them both well in the future. Please also join me in welcoming Rodri Whitlock, who joined the board on the 19th of January 21 and has assumed the role of Chairman of the Audit Committee. In addition, we recently announced that Pippa Latham will join the board on the 1st of September 2021. The AGM is being live streamed over the internet to give shareholders the opportunity to take part in the proceedings. Given the uncertainty at the time we published the notice of the AGM and the ongoing government measures in relation to social distancing, this meeting is convened with the minimum necessary attendees. The quorum for this AGM is 2 members entitled to vote in person or by proxy. This has been met, and therefore I declare the meeting open. At last year's AGM, a special resolution was passed to change the Articles of Association to allow for virtual and hybrid meetings to be held when necessary. This was to allow continued shareholder engagement when face-to-face meetings were not possible. A positive impact of these virtual meetings has been that many more shareholders are participating in our AGMs than has historically been the case. We have adopted a slightly different approach to last year's AGM to allow shareholders to ask live questions following the manager's presentation. May I ask that you use the Hopin chat function to send questions through to me. To do this, go to the right side of your screen, click the Slido button, and you'll be able to type your question there. I would like to thank shareholders who have already sent their questions to the Chairman's email address. We will be answering a selection of these questions shortly. The board highly values engagement with the shareholders, and I do hope that at the end of the AGM you will give us any feedback. You may give that to the same email address. We'll start today with a presentation from Will Fraser Allen, the Managing Partner of Albion Capital. So over to you, Will.
Max, thank you very much indeed. And I'd like to join you and the board in welcoming so many shareholders to this presentation today, where I will be going through the results for the year that has just ended on the 31st of March 2021. Next slide, please. Having gone through the results, I'll be looking at the broader track record, how the investment portfolio is developing, and that includes both sales of investments and new investments that we've made, and then touching on our investment strategy, looking at ESG, and then giving you some thoughts on the prospects for the VCT going forward. Next slide, please. The year to March 2021 was a strong year, and I'm pleased to report to you shareholders that we ended with a net asset value of 114.6p. Importantly, that was 12.67% ahead of where we were at the beginning of the year. A good result and well ahead of our target dividend yield of 5%. Having moved to a new dividend policy targeting 5% of prevailing NAV, we paid a 5.44p, which represents a 4.7 yield if you look at the current NAV, also reflecting that NAV rose through the year. Next slide, please. So where are we in terms of COVID-19? We're a long way into this pandemic. We're optimistic that we can see some light at the end of the tunnel, but we do now have a much better feel for the impact on our portfolio, which I'm pleased to report has stood the test well. And that is largely due to the focus of this fund in areas that have been less affected than perhaps of some others. And I would particularly highlight healthcare as a theme, but also software more generally. But COVID has had some other positive impacts in the sense that, as Max just highlighted, is we have seen greater engagement through the use of virtual platforms like Hopin in terms of reporting to you as shareholders. And typically audiences are up some 150%. And I'm very pleased to see that there are many, again, joining us today. It was also useful when we were fundraising. We were able to fully automate the application process to subscribe for shares in the fund. And we were forced by circumstances to run that process completely remotely with considerable success. Next slide, please. Track record is good, and we have just announced the June results, which has just gone out on the stock exchange RNS, and I'm very pleased to report further significant progress. Indeed, the NAV has risen to 127.9p, so that is a further 11.6% increase in the first quarter. Looking at our track record on a longer term basis, this table is useful in that it looks at both March position and taking into account the latest June. And what we see is that if you take the June numbers, we've now delivered 102% over 10 years. So that's more than 10%, just over 10% a year. So a good result that is delivering against the objectives of the fund. Next slide, please. Looking at shareholder return, we use the FTSE All Share as a benchmark on the grounds that this is designed to be a long-term savings product. And what you'll see here is that we're now moving nicely ahead of the FTSE All Share, which is encouraging. Next slide, please. So what drove the return in the year? And it was a number of things. We had some exits, OnPrompt, G Network, Clear Review, SBD, and I'll talk to a few of those in a moment where I've got separate slides. We had decent investment rate, investing 7 million up on the previous year, and we were able to fundraise, being fully oversubscribed, raising 9 million, continuing to pay dividends, and the strong performance also gave rise to a performance incentive fee payable to us as the manager. Next slide, please. Breaking down the drivers of return in more detail, looking at particular investments, Quantexa has done very, very well, and we benefited from fundraising in the year, which was at a higher valuation, and Quantexa has now gone on to do a further raise at a higher valuation, and have just raised $153 million, and that was from a global private equity fund, Warburg Pincus. Pravica, our pediatric drugs business, continues to grow its sales in Europe and develop its pipeline of further pediatric drugs. And Egress, providing encrypted email and data exchange capability, has clearly benefited from COVID and the sharp move to working, but either fully remotely or in a hybrid way. Our exits delivered, but on the downside, Murada, which was our medical imaging business selling into hospitals, has somewhat struggled. It's been very difficult to sell to hospitals when they've been so preoccupied doing important work, looking after those suffering from COVID. And then there've been a whole host of other write-ups and a few write-downs, and those can be looked at in the annual report on page 24 and page 25. Next slide, please. The portfolio continues to develop. And by way of a reminder, we are progressively moving to a greater exposure to software, both enterprise software generally, but specifically fintech, i.e. selling software to financial services businesses, and continuing to build our healthcare exposure, particularly in digital health. Cash at the year end was relatively high at just under 30%, but we have had an active investment program since then, as we deployed the proceeds of our fundraising. The portfolio is now 49 companies, so diversified by over a number of companies. And encouragingly, we are now, through our portfolio, employing some 3,000 people, mostly in the UK. Next slide, please. Digging deeper into the portfolio, this is how we tend to look at the portfolio to get a sense of how the portfolio is exposed to stage investment, early stage being more volatile, potentially more risky than later stage. And you can look at that in terms of turnover, and you can look at that in terms of number of staff. And the important point here is that a decent chunk of the portfolio, in excess of 50%, is now in businesses of turnover over $1 million, and are now employing significant numbers of people. The exposure to the early stage, which is an important driver of future returns, is relatively restrained at the moment. Next slide, please. The feature of venture capital investing is that the winners come through. We call them the outliers, and this is a feature that we will see more as these businesses grow and become more substantial. So this slide shows you the top 3 investments: Egress, Quantexa, and Pravica, all of which I have referred to earlier. And what it shows is not only is it delivering good uplift, 23 million current value, that's March versus 7 million, but what it also shows you is that these businesses are growing very rapidly, and now in aggregate account for 27.5% of net asset value. With progress since March to June, that number has increased to about 34%. And this is a feature of our strategy that as the winners come through in the portfolio, we want to continue to back them to capture the maximum value for the fund that we are able. Next slide, please. A few of the new investments. Solidatus is very much in data. It's helping large organizations, particularly banks, control the complexities of multiple sources of data across the globe, and the many sets of regulations globally they have to operate on. The example being GDPR in the UK, but pretty well everywhere else has equivalents. And this platform helps large organizations make sure that they're able to maintain compliance with those regulations. All the Albion VCTs invested 7 million, of which 1.4 million came from this fund. Next slide, please. WeGift's a very interesting business. It's in the whole area of corporate rewards to you and I, that is digital gift cards. So where traditionally you might have given out gift cards to your employees, or you might have used them as an incentive to encourage customers to come. A good example would be a financial services business offering a voucher for signing up to a nicer product. But this has been very manual, lots of physical cards being delivered, also an enormous market, many billions. And what WeGift is doing is turning that into a completely digital offering. So being able to send out these rewards, whether to employees or new customers, using email and the equivalent, yet offering a huge variety of potential rewards for their customers to pick and choose from. We invested 4 million as a group of VCTs, 0.6 million being from this fund. Next slide, please. Selden very much in the forefront of machine learning, providing a platform for corporates to deploy their machine learning models more effectively. A real challenge for corporates, training them, making sure they're up to date, making sure they're worked. And this simplifies and provides that platform, and in turn represents huge time saving for those very expensive data scientists that work in this area. A smaller investment, reflecting the fact it's earlier stage, 2.8 million, of which 0.4 was from this fund. Next slide, please. I won't go through all of these, but these are just a flavour of some of the other investments we've done, both new and follow-on. Transfic, a fintech business helping banks connect to trading venues, particularly for fixed income. Quantexa, we've referred to. UMed on the digital health side, helping recruit for and operate more digital clinical trials, and particularly being able to access through clever access to medical records, a broader range of potential participants in the trial. And Black Swan, a company that's been in our portfolio for a number of years, has made great strides in its data analytics product, helping FMCG businesses better understand consumer trends to predict how they might develop and expand products. Next slide, please. On the realizations, we had positives and negatives. The shareholders will recall that we implemented a strategy of investing through an OLIM unit trust in the UK FTSE 100 and FTSE 200 space. The strategy was designed to deliver diversity, but also to deliver income, given that the yield on the FTSE was rather higher than we could get in banks. Sadly, the strategy was dealt a blow, both from Brexit and then from COVID, added to, sadly, some not terribly good performance from our OLIM subsidiary. We took a decision in consultation with the board to sell the enterprise VCT exposure to OLIM, recognising that our time is better spent focusing on innovative unquoted businesses. As a note, OLIM we have wound down, and its clients have transferred to other investment managers. So an apology from Albion. It hasn't been a great success. We've recognised it hasn't worked, and we've taken action to focus our endeavours on areas where we see greater upside. Next slide, please. On a more positive note, we sold OnPrompt, which is our automation business, and that delivered a 2.3 times return for the fund. Next slide. G Networks was our business which was putting in a network, a broadband network across London. It's been very successful. It's now provided broadband potentially to 160,000 premises. The investment has gone well. We delivered a 3.8 times return, a relatively small investment for this particular fund, but will deliver proceeds of 1.5 million. The way it was structured is that there is the vast majority of that return will be delivered in just under 3 years' time. But the counterparties to that transaction are funds controlled by the very significant University Superannuation Scheme, and also a large European infrastructure fund called Cube. Next slide, please. Clear Review was our software investment that particularly helped organisations manage the staff appraisals better. This was an unusual one in that we were not in the investment for very long at all, 15 months, still delivered a 2.1 times return at a 73% IRR, reflecting the short hold period. It's unusual in the sense that we would normally expect to stay in an investment rather longer than 15 months, but a set of circumstances, desire by advanced computing software to pay a decent price now, led the management team and Albion to decide to sell. So still a good return in a short space of time. Next slide, please. Investment strategy, still very much as I reported to you last year. We invest from early stage, which we call seed, through to Series B. So that's where businesses would typically have several hundred employees and be growing very fast. Our particular sweet spot, if you like, is Series A, which sits between those two extremes of the investment horizon. So these are businesses that have a product, they've developed it, they know they have good customers, they know what they want to do, and our investment goes in to accelerate their activities, usually through expanding their marketing and sales capability, developing the product, but often also looking at overseas expansion, particularly into the US. We're focusing on software, so digital security, fintech, digital marketing, increasingly important as a result of the pandemic. And as many of the examples have shown, how companies deal with data has just become a very important and strategic area for corporates to consider. Healthcare continues to be our core focus for us, whether that's in digital health, so that's making healthcare more efficient through the use of software, but also with companies like Pravica looking at how we can help with funding specialist pharmaceutical objectives such as our pediatric medicines, but also looking at diagnostics more generally. But outside those sort of core areas, automation continues to be important, sensors, and indeed we're looking at how technologies are going to improve the automotive sector. Our focus is business-to-business software and technology-enabled services. We don't focus on the consumer. We are very much a fund looking to benefit from selling into large corporates, selling recurring income contracts that will grow that income over many years. Next slide, please. ESG, so important, very much understanding that if we invest in businesses that have positive societal and environmental impact, that gives rise to long-term valuable businesses. And this has been very much our theme, as you will have seen over the years, investing in areas like education, in areas like renewable energy, but increasingly looking at how we can grow that desire to invest in a responsible way as signed up members to the UNPRI, which is a framework for investment managers to ensure that ESG is absolutely at the core of what we do. And if we go to the next slide, you'll see that is now absolutely in our process, whether we are considering the ESG strategies of businesses from when we look at them at a very early stage, but also due diligencing where companies are in terms of their own due diligence journey, helping them develop that strategy over time, recognizing that when we come to exit those investments, whether through a sale or an IPO, ESG will absolutely be at the mind of the large corporates that look to acquire our businesses, or indeed investors that will invest in the IPOs. And as you'd expect, we are pushing against an open door, and I pay tribute to the many CEOs and management teams that work for us and just how engaged they are in terms of making sure that the businesses that we invest in play their part in what is such an important global topic. Next slide, please. We ourselves are at Albion have an ESG strategy. We're looking at our own carbon footprint. We're looking at our own diversity. We're looking at our whole processes. And part of that, we continue to invest time, effort, and into our charitable activities, supporting two fantastic charities, WizKids, which provides equipment for disabled children, and Generating Genius, which encourages those from disadvantaged backgrounds to go through into STEM university courses, but also ultimately STEM careers, very much in keeping with the sorts of investments that we invest in. And we continue to play our part. We raised £5,000 in the first quarter, and we are building on a number of activities over the coming months to build on that thing. And just thank you to many shareholders who took us up on our offer, those who signed up for electronic communications or applied for their shares by online applications. We, Albion, contributed £1, which was split between those two charities. So it's been a very much combined effort, both with the team here and you as shareholders. Next slide, please. So what are the prospects going forward? I'm positive. The first quarter for this year to June has reinforced that view, that the portfolio is well placed. Its exposure to healthcare and software is proving to be a good place to be. We're seeing some really interesting investments coming through, and by not being exposed to the consumer, we are managing to avoid some of the very difficult sectors that sadly are finding life quite tough as we sort of emerge from the pandemic. Next slide, please. So picking on a few of those themes, we do think there's some companies coming through that are exciting, and I refer again to Quantex, Egress, and Provica. They are growing, they're thriving, and have excellent prospects. We have a number of new investments coming through, and we continue to target that 5% yield on NAV dividend. And to that point, we have announced a 2.87p dividend, which will be paid on the 31st of August 2021. Next slide, please. I'm going to end with a fraud warning. I'm afraid it's an ongoing problem that's not helped by the pandemic, as we've seen more and more instances of cybercrime. And this in particular is where it impacts our shareholders. And these are known as boiler room scams. This is where apparently sounding incredibly credible corporate financiers, who really aren't anything of the sort, ring up shareholders saying that there's a potential offer for the business, multiples of the current share price. It's just nonsense. What they're trying to do is extract money from shareholders, and they use various methods for doing that. They might ask for a fee for advice. They might charge a fee for an NDA. Please, 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 just ignore them. Let us know so that we can keep track. But for goodness sake, do not give out any of your own details or part with any cash. Next slide, please. That brings me to the end of my presentation, which I hope has given you a good flavour of all the very busy year we've had and the prospects of the year to come. And if I move to the next slide, we'll now move to questions and answers, and Max will be running the question and answer session. So I'm hoping that a number of questions will have come through for Max and for the board and for me on behalf of the manager to answer. Max.
Thank you, Will. We have indeed received questions from shareholders. I'm very grateful for that. And we'll now answer as many questions as time permits. But all relevant questions and the corresponding answers will be posted on the Albion Capital website as soon as possible following the meeting. First question I've got is, over the last 12 months, which topic or topics has generated the most energetic discussion between the board and management? I suspect that Will and I probably would have the same points, but if I start off, I suppose the main problem for us is to make sure that our valuations are neither over-conservative or too high. And so it is getting that balance. And whilst it's in some cases quite easy to get a valuation because it appears with like Quantexa, we've had a transaction which has taken place. With other investments, clearly it is more subjective. And so the biggest discussions that I feel that we have around the board table, both from the director's side and from the manager's side, is how we make sure that our valuations are sensible and reasonable. Will, have you got any further to add to that?
Yeah, I think valuations, absolutely. It's we spent a lot of time there. I think I'd also add an important sort of conversation between the board is managing liquidity within the fund. So and this is the balance between the level of cash holding we have, recognizing that we, on the one hand, pay out dividends to our shareholders, provide buybacks, but also making sure that we can both support our existing portfolio and make new investments. And that I think is a key area that the board and manager engaged with each other, being so critical to the long-term health of the fund.
That's fine. Will, I'm going to ask further. It's really related to that valuation of our investments. And one shareholder has come forward and said that the technology sector is overvalued and due for a correction, isn't it?
It is undoubtedly valuations within technology space and indeed the healthcare space have increased over recent years. That's an absolute. But stepping back, one wants to look at why is it, as the question suggests, a fad, bubble, or is there real underlying fundamentals that drive that move? And we are very much in that second camp. It's a well-hackneyed term that software is eating the world. Every business in the land is having to go through a digital transformation. And you've seen from the growth of some of the very large technology businesses that technology, software, automation is so critical to increase productivity, that there is a long way still to go. And I'm very encouraged when I look at the portfolio that there are many businesses that are growing very rapidly. I think the second point to make is, we invest at the early stage, and that's important because we are typically benefiting from very significant growth to drive our returns, less so what is the price at which we've paid. So we, whilst not in any way ignoring valuation, because it's certainly a core area of debate, discussion on our investment committee, but also recognizing that actually the sensitivity of return is probably less on the entry value because we are backing such considerable growth over time than one might imagine looking in from the outside.
Thank you, Will. Further question, given the performance of the company, should shareholders expect a special dividend payment this year?
It's always very nice to pay special dividends. I think a really important point to make here is that special dividends also is a distribution of cash. So where we pay special dividends is because we have a surplus of cash. And this goes back to my liquidity point earlier. When we are looking at how our dividend policy, whether that's the regular dividend or a special dividend, it's all driven by our expectations around the cash flow requirements of the fund. So in this particular case, the increase in valuations of a Quantexa and Pravica is an interim increase of value as a result of a transaction, not because of an exit. So therefore hasn't given rise at this stage to surplus cash being delivered. But the board and the manager, we keep the liquidity under review at all time, and indeed those that are investors in other VCTs in the stable, where exits have given rise to surplus cash, we have in those situations paid dividends. We're not currently in that situation with Enterprise.
Thank you, Will. How does Albion pick the most exceptional winners that it has had recently?
That is absolutely at the core of what we do. And this is all about originating those deals, identifying them, and then backing the right one. And there's a lot that goes into that. So I think at the core of it is thinking deeply about where the world's going, looking at where we believe markets will be created, where products can have a big and significant impact. But it's also about developing a thesis around an investment area. So we spend a lot of time doing what we call deep dives, whereas we allocate specialisms to individuals within the team. So that could be cybersecurity, for example. It could be how cryptocurrency might impact the world, and then developing that thesis, developing that specialism in-house, so that we've got a very clear view of the types of investments that we are seeking to invest in as we find those opportunities or they present themselves to us.
Still with you, Will. If a company IPOs, will you sell the stake or hold listed equities too?
The question makes an interesting point, because there have been a number of IPOs around in various stables of other managers. And indeed, we have had an IPO in our own stable, a business called Aracor, which is a life sciences business. IPO is simply to us an investment decision. Typically, we haven't seen many exits from IPO because of the nature of our investment focus, because we tend to back B2B businesses. We tend to find that large corporates are our ultimate seller, but that doesn't mean we have closed eyes to IPOs. And the opportunity of an IPO is a decision. It's a fundraising. Those businesses are raising further funds. We need to decide whether we believe the returns of money returned to our cash in new investments outweighs the potential return of continuing to be a shareholder. So we have flexibility within that decision framework. It's a case-by-case decision. It's driven by where we think the greater returns and opportunities are, listed or through an exit at that point.
Thank you, Will. How does the uncertain outlook for inflation affect the investment strategy?
So it's an interesting question, inflation, and it's one that there's a broad range of views from economists at the moment. From is it a temporary reaction to returned consumer demand post lockdown, or is it going to be longer and more endemic? The broader point on inflation is that the pricing of technology should be relatively resistant to inflation. They are annual contracts, which typically should increase with inflation. So at a top level, we believe the strategy is well placed for inflation. Having said that, until we have a better view of what the scale of a potential inflationary pressure might be, it's difficult to have a very long-term view on that.
Thanks, Will. Pipeline of new investments. What is the pipeline looking like, Will?
It's good, and maybe the way to sort of demonstrate that is to look at the investment activity that we've undertaken since the end of March. So between March and August, where we are now. So we've made 4 new investments into Gravity, Nuvo Air, Bright Light, and Excellex. So to have already done 4 investments in that period speaks to an active pipeline. Looking forward, we've got a number of investments that we're working up, but I think the other part of our investment activity is supporting the existing portfolio. And in that regard, when I look at the growth and the opportunity that our own portfolio is giving us to provide further funding, I'm very encouraged by a number of opportunities that we will have to deploy both proceeds of potential exits, but also potentially any fundraising the board may decide to do in the future.
Will, I've got 2 more questions for you, and then that completes the questions. First one is, are you expecting any change in tax regulations from the government on VCTs? And if so, what are they? And would they influence the decisions that you're taking? And I suppose linked with that should possibly be a mention of sunset clause in 2025, which a number of shareholders may have heard of.
Absolutely. There is no question that VCTs are in a very privileged position in the support we receive from Treasury. And the core of that is what is Treasury's policy in doing that, and I think that's probably best articulated as backing young, innovative businesses that will grow into significant businesses that can employ people and create real innovative IP. So the heart of that question is, are we delivering to government what they have asked? And we do engage with Treasury through the VCT, which is our industry operation. We are constantly reporting at industry level on investment activity and some of the successes that are coming out. And the feedback we get is that they see there is real value seen in what VCTs do. And I think as we emerge from the pandemic, I'd like to believe that VCTs can very much be part of the solution to clawing our way back to a vibrant economy. There is an opportunity to create new businesses, create employment, create opportunity, and in that regard, I'm optimistic that the government recognise that and will continue to support VCTs. So I don't see any immediate change to the VCT rules. You refer to the sunset clause, which was implemented when VCTs got state aid approval some years ago. And this was a European requirement which simply said that in 2025, unless the VCTs were renewed, the upfront tax relief wouldn't continue. We understand that Treasury are beginning to think about their response, and again, given the growth and I would argue the really vital work that the VCTs are doing, I remain optimistic that we would, that the VCTs will continue beyond that.
Final question, will the Albion VCTs be fundraising this year? And that covers not just enterprise, of course.
Yeah, absolutely. So our fundraising cycle each year, and we do raise money each year, not necessarily for all VCTs. It's very much, we look at each VCT and the cash requirements on a case-by-case basis. And the process for doing that is that we would look to be making recommendations to boards in Q4. And then on the back of that, we would be launching a top-up offer at the very early in January. We would expect to be doing a fundraising. What I do not have not yet firmed up a view on is which VCTs will be fundraising and how much they'll be raising, and that's a dialogue we will be having with the board later this year.
Well, thank you everyone for your questions and Will for your answers. I will now proceed with the formal business of the AGM. The notice convening the meeting has been in your hands for the statutory period, so I'll take the notice as read. There have been no questions from shareholders on the AGM resolutions, and therefore I'll proceed. Christopher, Rodri and I are shareholders, and as such are permitted to vote. The rest of the board and shareholders will not be able to vote as they're not at the place of the meeting. However, you will shortly see that the proxy votes we have received show that the majority of shareholders have voted in favour of the board's proposed resolutions. I don't intend to read out the proxy votes after every resolution, but I'll show them on the screen as each resolution comes up. The first resolution is to receive and adopt the company's accounts for the year ended 31st of March 2021, together with the strategic report and the reports of the directors and auditor. Those in favour? Thank you. I declare the resolution carried. Resolution 2 is to approve the directors' remuneration report for the year ended 31st of March 2021. Those in favour? Thank you. I declare the resolution carried. Resolution 3 is the election of Rodri Whitlock as a director of the company, and I have pleasure in proposing Rodri for election. Those in favour? Thank you. I declare the resolution carried. For the next resolution, I'll pass the chair to my board colleague, Christopher Burrows.
Thank you, Max. Resolution 4 is the re-election of Maxwell Pack as a director of the company, and I have pleasure in proposing Maxwell for re-election. Those in favour? Thank you. I declare the resolution carried. Back to you, Chairman.
Thank you, Christopher. Resolution 5 is the re-election of Christopher Burrows as director of the company, and I have pleasure in proposing Christopher for re-election. Those in favour? Thank you. I declare the resolution carried. Resolution 6 is the re-election of Patrick Reeve as a director of the company, and I have pleasure in proposing Patrick for re-election. Those in favour? Thank you. I declare the resolution carried. Resolution 7 is the reappointment of BDO LLP as auditor of the company to hold office from the conclusion of the meeting to the conclusion of the next meeting at which the accounts are to be laid. Those in favour? Thank you. I declare the resolution carried. Resolution 8 is to authorise the directors to agree the auditor's remuneration. Those in favour? Thank you. I declare the resolution carried. Resolution 9 is to increase the directors' aggregate remuneration cap to provide capacity for succession planning. Those in favour? Thank you. I declare the resolution carried. Resolution 10 is to allow the directors to allot shares. Those in favour? Thank you. I declare the resolution carried. Resolution 11 is a special resolution that allows the directors to be empowered to disapply preemption rights. Those in favour? Thank you. I declare the resolution carried. The final resolution, which is again being proposed as a special resolution, is to authorise the company to make one or more market purchases of ordinary shares in the capital of the company. Those in favour? Thank you. I declare the resolution carried. Thank you. That concludes the formal business of the AGM. I'd like to thank all shareholders who've joined this live streaming of the AGM. The board welcomes any feedback you may have, which you can do by sending an email to AAEVchair@albion.capital. And for those of you who are interested in seeing the list of questions and their corresponding answers, these should be available shortly on the Albion Capital website. I hope you were able to watch the entire presentation without connection issues. However, if you'd like to watch a recording of the event, a link to the video will shortly be available on the Albion Capital website, alongside the manager's presentation and the formal business of the AGM to view at your leisure. That concludes the business of the AGM, and I'll now formally close the meeting. On behalf of the board, I do hope that you all stay safe and well. Thank you.